Welcome to the deep dive. India's energy sector is, well, it's really in a period of dynamic transformation. And right at the heart of this, you've got market platforms like the Indian Energy Exchange playing such a crucial role.
Absolutely.
So today we're taking a deep dive into the recent Q1 FY26 financial results for IEX, Indian Energy Exchange Ltd. They're a major player, obviously, in India's power markets, and increasingly in these emerging energy spaces, too.
That's right. And our mission today really is to sift through all the data, cut through the noise and figure out what truly matters behind these numbers. We've got the official docs Q1 financials, the investor presentation, press releases, all dated July 24, 2025.
So the goal is to pull out the key insights, right? Give you, our listener, a really clear picture of how IEX performed and, maybe more importantly, where they seem to be headed.
Exactly. Let's get into it.
Okay, so Section 1, the Q1 FY26 snapshot. IEX seems to have had a pretty strong start to the fiscal year. Looking at the numbers, the overall picture looks like impressive growth.
It does. Their consolidated revenue, for starters, hit over 184.2 crore. That's a jump of, 19.2% compared to the same quarter last year?
Yeah, 154.5 crore last year, so nearly 20% up. Pretty solid.
And what's really striking, I think, is that the profit growth was even stronger. Consolidated profit after tax, the PT, came in at 120.7 crore. That's up 25.2%.
Wow, okay, so profitability outpacing revenue growth, that usually signals good efficiency, right?
Exactly. And even if you just look at the standalone PAT, that was up 21% to 113 crore. It's a strong performance across the board on the profit side.
And that translates down to the per share level, too, for investors.
It does. Basic diluted EPS, earnings per share, 1.36 for the quarter. That's up from 1.08 in Q1 last year. So clear per share growth.
Okay, so the financials look healthy, but what about the actual, energy moving through the exchange, the operational side?
Well, operationally, the story holds up. IEX reported 32.4 billion units in electricity volumes for Q1. That's a solid 14.9% growth year over year. Shows continued healthy activity in their core electricity markets.
14.9% growth in electricity volumes.
Yep.
Okay. But wasn't there one area that really, exploded? The green certificates?
Ah, yes. The renewable energy certificates, or RECs. That number is genuinely staggering. They traded 52.7 lakh RECs in Q1. That marks a 149.3% increase year over year.
Whoa, 150% almost.
Yeah.
That's massive compared to the overall volume growth. What's driving that?
It's huge. It really signals that the market for, green attributes is becoming much more robust, much more liquid in India. It benefits IEX directly, of course, but fundamentally it points to, rising commitment from corporates, from states to meet their renewable energy goals. It's turning into a really significant segment.
Makes sense. And within the electricity trading itself, where did you see the most action?
Yeah.
In terms of their product mix?
Good question. The data shows their real-time market, RTM, and the green markets saw really substantial growth of 41% and 51% year over year, respectively.
41 and 51%, okay.
Yeah. And if you look at the collectives, that's the day-ahead market, the real-time market, and the green day-ahead market together. They actually account for about 75% of the total electricity volumes.
So 3/4 of their volume is in those spot markets. That really underscores their role in, immediate flexible power trading. Super important for grid balancing.
Precisely. So yeah, these Q1 results, they aren't just a flash in the pan. They seem to genuinely align with and frankly propel IEX's longer-term growth strategy within India's whole energy transition story.
Right. But performance doesn't happen in isolation. Let's talk about the wider economic currents in Q1. How did the macro environment play into this?
Well, it's interesting. On the demand side, India's peak summer power demand did hit a record 242 gigawatts on June 12th. That's a big number.
Huge.
But overall, electricity consumption for the whole quarter, Q1 FY26, was actually a bit lower than expected. It came in at 446 billion units. That's down 1.3% compared to Q1 last year.
Down, even with that record peak.
Right.
Why was that?
Mostly due to the weather, actually. The monsoon arrived early, and there were some unseasonal rains in parts of the country, which, kept temperatures down a bit. Less air conditioning load than anticipated.
Ah, okay, that makes sense. So, slightly lower overall demand. How did that affect the supply side? Fuel availability, coal, gas?
The fuel situation seems to have been quite comfortable, according to the sources. Coal production held steady at 247 million tons, similar to last year. And critically, coal inventories at power plants were healthy around 25 days worth by mid-July.
Okay, so decent fuel supply. What did that do to prices on the exchange?
That's a really interesting part. Better supply liquidity on the exchanges actually led to more competitive prices.
Competitive meaning
Yeah.
lower prices for buyers.
Exactly. The day-ahead market, the DAM, averaged 4.41 per unit. That's a 16% drop compared to last year.
16% lower. Wow.
And the real-time market, RTM, averaged 3.91 per unit. That's a 20% decline year over year.
So even though overall consumption dips slightly, the improved supply situation made the exchange more attractive price-wise, driving volume.
That seems to be the dynamic. It shows how IEX can benefit from market efficiency and liquidity, not just raw demand growth. It highlights their role in price discovery.
That's a key point.
Yeah.
And how did this translate into their revenue breakdown for the quarter?
Their core business, the transaction fees, continue to dominate. It made up 74% of their standalone revenues in Q1.
Okay, the bulk of it.
Yeah. Then you had other income contributing 23%, and the admission and annual fees making up the final 3%. So the engine is clearly those transaction volumes fueled by that market activity.
Got it. So it's clear IEX is doing well in electricity, but they're not stopping there. They're really pushing into this broader energy landscape. Let's shift to that diversification, starting with the Indian Gas Exchange, IGX. How's that performing?
IGX saw, frankly, remarkable growth. They traded a record 24.6 million MMBtu of gas in Q1. That's up 109% over Q1 last year.
Double the volume. Who's driving that demand?
Primarily oil marketing companies and city gas distribution companies. And it's not just volume. Profitability is soaring too. IGX posted a profit after tax of 14.1 crore for Q1. That's up 86.7% compared to last year's Q1.
Okay, so IGX is really taking off. What's next for them strategically? Are they launching new things?
They are. They're expanding their offerings. Balance of month, or BOM, contracts are already approved for small-scale LNG, SS, LNG. They're waiting for the nod on pipeline natural gas. They're also adding a new delivery point at Palanpur to increase their geographical reach.
Expanding physically, too.
Yep. And looking further ahead, they're exploring compressed biogas, CBG, and even hydrogen trading. They've signed an MOU with EEX, GIZ, and others on hydrogen. Plus, they got selected as an empanelment agency for the Directorate General of Hydrocarbons e-auctions.
So they're embedding themselves deeper into the gas ecosystem and linking this back. This IGX growth really fits into the government's big push, right, to get natural gas from, 6% of the energy mix up to 15% by 2030?
Precisely. It's a massive target, implying potentially double the gas consumption. IGX is positioning itself right in the middle of that expected growth. It's a huge potential market for them.
Makes perfect sense. Okay, what about carbon, the International Carbon Exchange, ICX?
Right, ICX. Formed back in December 2022, focusing on the voluntary carbon market. India is a big seller in this space, and ICX acts as that crucial bridge, especially for international markets.
So how did ICX do in Q1? What are the key metrics there?
They issued over 44 lakh international renewable energy certificates, IRECs, in Q1 FY26, and generated revenue of about 178.8 lakhs. The key thing to remember about IRECs is they're globally recognized digital certificates for green power generation.
ICX is the only issuer in India.
That's right. They're India's sole issuer of IRECs. It gives them a really unique strategic position in that international voluntary carbon space.
Interesting. And I keep hearing whispers about a coal exchange. Is IEX involved there?
They are. They're actively involved in the government's plan to set up India's first coal exchange, targeting launch by maybe FY 2026-27. There are ongoing discussions, especially about amending the Mines and Minerals Development Regulations Act, the NMDRA, to allow surplus coal sales via the exchange.
Okay, another potential big diversification.
Yeah.
So when you add it all up, gas, carbon, potentially coal, what does this strategy tell us about IEX overall?
It tells us they're building a much broader energy trading ecosystem, moving significantly beyond just electricity. It's a strategic play to capture growth across the entire energy value chain, especially as India goes through this huge transition.
Right. Let's talk more about that transition and the future growth drivers for IEX. This is Section 4, Strategic Horizons. India's current energy mix is still heavily coal, right?
It is. For April-June FY26, it was about 70% coal plus lignite, with renewables around 25%.
But the projections for 2030 show a massive shift. Renewables and hydro combined are expected to hit 60% of installed capacity, up from 48% now.
That's the projection, a monumental change in just 5 years. It's being driven by, well, A few key things. Technology costs coming down, especially for renewables and batteries. Changing preferences, think EVs, data centers needing more power, new business models like energy as a service and VPPAs, and of course, supportive regulations.
Okay, so against that backdrop, IEX has identified 6 key growth levers. Let's unpack those. First one seems straightforward, just growing demand.
Yeah, basically, with India's GDP projected to grow at 6-7%, plus all the electrification happening, EVs, data centers, even AC use expected to grow massively by 2050, overall electricity demand is forecast to hit around 2,300 billion units by FY 2030.
And IEX tends to grow faster than overall demand.
Historically, yes. Their volume growth has shown about a 2.5x multiplier over the growth in overall power demand. So more demand means potentially much more volume for IEX, a powerful tailwind.
Okay, multiplier effect, got it. Second lever, new products and regulatory changes.
Right. This is where specific market design changes come in. For example, extending the term ahead market, TAM, contracts out to 11 months. That could potentially pull about 40 billion units of trading volume away from the government's direct contracting platform deep onto the exchange.
40 BUs is significant. And what about rules forcing generators onto the exchange?
Exactly. The LPSC rules related to deviation settlement mechanism penalties now mandate generators, including state-owned ones, to offer their surplus unrequisitioned power on exchanges. That pushes more supply liquidity towards IEX.
Okay, that makes sense.
Also, things like the green real-time market, which is awaiting its final go-ahead, that creates a whole new specific market segment. And the REC market potential is still huge, with the move to a single REC type, tougher compliance, no floor price, and trading every 2 weeks. There's a current inventory of 4.1 crore RECs out there.
Wow, 41 million certificates waiting to be potentially traded. And even virtual power purchase agreements, VPPAs, are now formally recognizing exchanges like IEX as platforms.
Correct. Draft guidelines point that way. It further cements their role. Which leads nicely into the third lever, the official roadmap for deepening these markets. The Ministry of Power put out a report in 2023 laying out steps short, medium, long-term to develop the market further. Things like market-based ancillary services, capacity contracts. It's a deliberate government push.
Okay, so active regulatory support, lever 4, the energy transition itself, and new market models. This sounds transformative.
It really is. The thinking is, as India's renewable energy share crosses that 20% threshold, something that triggered faster market growth in Europe, IEX, is set for accelerated penetration. We're starting to see new complex products emerge, like firm dispatchable RE, FDRE, and round-the-clock RE, RTC, which crucially integrate battery energy storage systems, BESS.
You mentioned battery costs earlier. They've plummeted, right?
Astonishingly so. BESS capital costs went from about 10.83 lakhs per megawatt per month in 2023, down to just 2.80 lakhs per MW per month in Q1 2025.
That's almost a 75% drop. That must make these integrated renewable plus storage projects much more viable.
Absolutely. It makes providing reliable green power around the clock far more economical. For IEX, it means more sophisticated, higher value products can be traded on their platform, deepening the market.
Okay, fifth lever, diversity in demand and supply across India.
Right. This is about geography. You've got different peak times and needs. North India needing power for summer paddy crops, Telangana for agriculture at other times, and different generation profiles, lots of wind in the west and south, hydro in the north and northeast.
So these regional mismatches create natural trading opportunities.
Exactly. They increase the need for an efficient national platform like IEX to balance things out and move power where it's needed most economically.
Makes sense. And the sixth lever, increasing sell-side liquidity, more power available to trade.
Yes. Supply constraints seem to be easing. We talked about the comfortable coal situation, 247 million tons produced in Q1, targets aiming for 1.3 billion tons annually by FY26. Plus, huge new capacity is coming online, both thermal and a massive 40-50 gigaW of renewables per year. A lot of that new renewable capacity is expected to be merchant, meaning it will sell power on the open market, likely via exchanges.
So more supply feeding into the exchange.
Yeah.
Beyond those 6, you mentioned a few other opportunities.
Yeah, briefly. Things like encouraging load shifting to maximize use of cheap solar power during the day, the development of a formal capacity market, which is a longer-term goal. And interestingly, other exchanges have recently started trading electricity derivatives.
Futures and options.
Exactly. And they're using IEX's day-ahead market price as the benchmark, the underlying price. This doesn't directly benefit IEX's volume, but it provides vital hedging tools for market participants, making the overall ecosystem more robust.
That's fascinating. The complexity and the sheer number of these growth drivers all sort of weaving together. It really paints a picture of potential transformation for India's energy sector with IEX right in the middle.
It really does. The scale is immense.
Okay, but underpinning all this potential growth, you need solid operations. Let's talk about operational excellence, customer focus, and technology at IEX, Section 5.
Right. Because none of this strategy works without a reliable, user-friendly platform. On the customer side, they're doing things like capacity building workshops for the distribution companies, the discoms. They're also actively promoting open access through state-level events.
Trying to make it easier for more players to participate directly.
Exactly. And they've developed their own web platform, Energex. It handles digital onboarding, helps with financial reconciliation, and even offers advanced analytics to help participants with their bidding strategies. It's about improving the user experience.
And behind the scenes, the technology. What are they focusing on?
Continuous improvement seems to be the mantra. Availability, security, resilience, scalability, performance. They highlight a very robust business continuity plan. They claim a recovery time objective, RTO, of just 5 minutes.
5 minutes to get back online after a major issue? That's incredibly fast.
It is. And a recovery point objective, RPO, of near zero, meaning minimal data loss. They've also beefed up security infrastructure, moved to a microservices architecture for more flexibility, and are adopting AI tools for development and monitoring.
So why does this operational stuff matter to you, our listener?
Well, it means you can have confidence in the platform. If you're participating or even just following the market, you need it to be reliable, secure, efficient. These efforts ensure that the digital infrastructure supporting India's energy market is robust and capable of handling growth and complexity. It builds trust.
Essential for a marketplace. Okay, finally, let's touch on Section 6, leading responsibly IEX's commitment to ESG, environmental, social, governance.
Right. And they have some tangible achievements here. On the environmental front, they've been carbon neutral since FY22, India's first power exchange to achieve that. They were also the first to launch a green trading segment.
And ICX being the sole issuer of IRECs fits here too.
Definitely. It positions them clearly in the green energy space. On the social side, their corporate social responsibility, CSR, spending was around 842 lakh. They give specific examples impacting over 300 lives through healthcare initiatives, supporting education for over 800 underprivileged girls.
So concrete social impact. And governance.
They emphasize transparency, equity, accountability, and importantly, they report zero penalties or adverse remarks from regulators suggesting strong compliance. Their ESG ratings reflect this. Morningstar Sustainalytics gives them a score of 18.8, which is low risk. CSR Hub ranks them at 83, considered high.
So pulling it together, how should we think about this ESG commitment in the context of their overall business?
Well, it's not just about looking good. A strong ESG focus contributes to long-term sustainability, builds investor confidence, attracts talent, and ensures the company operates ethically and responsibly. It's increasingly seen as integral to a resilient, future-proof business strategy, not separate from financial performance.
What a fascinating deep dive. So to recap briefly, we've seen IEX's strong Q1 FY26 performance, their really impressive diversification into gas and carbon, and this whole suite of growth levers demand, new products, regulations, transition models, diversity, liquidity, all backed by tech and ESG focus.
Yeah, it paints a picture of a company that's not just reacting to India's energy transition, but is actively trying to shape it and position itself at the core.
Definitely. So maybe a final thought to leave you with, given India's huge energy transition goals and IEX's pretty complex multi-pronged strategy, what impact do you think the evolving regulatory landscape, especially around things like firm dispatchable renewables, or maybe even that potential coal exchange will have on their actual market position and dominance in the years ahead? Something to mull over.
A key question indeed. Lots of moving parts to watch.
We certainly encourage you to explore any of these areas further. Thanks for joining us on the Deep Dive.